Today, women, investment in the future. Hello again, it's Martin North from Digital Finance Analytics, as well as post covering finance and property news with a distinctively Australian flavour. Today, I'm joined by Kim Kiyosaki. Hi, Kim.
Hi, Martin. Thank you for having me on your show. I am such a fan of Australia, one of my favorite countries in the whole world, and I miss not being able to get there at this time, but soon I will be.
Well, it's great to have you on, and through the wonders of technology, we can still have a very important conversation. And look, you've got a significant reputation as an author, as an advocate for women's finance, but you're really passionate about this whole question of women, finance, investment. Why do you think that's so important?
Well, I do know that when it comes to money, women are very, very good at money, but I think we have to get over this conditioning, this programming that not only are like everybody in the world, we're not really taught anything about money, but for women, not only are we not taught anything, we're not expected growing up to even be the one considering the financial side of things. And we've actually been taught, if you look at, Cinderella and Prince Charming and all of that, we've actually been taught as women to depend upon somebody else for our financial well-being, be it a husband, a family member, government. So I think a lot of it, Martin, is the mindset that we have had over the years since little girls. And now times have changed so dramatically that I think a lot of women, especially today, given this time, we're facing wake-up calls. And we're facing situations where we've never been in before. And so now, more importantly than ever, I think women really need to start educating themselves about money, about investing, about finance, because it's no longer a luxury to not know about it.
Right. And you actually rolled out recently some statistics which were absolutely astonishing. 47% of women over the age of 50 are single.
Right. Correct. And most of those women, 50% of marriages, as we know, end up in divorce. And oftentimes it is the woman that ends up caring for the kids. Here's an interesting statistic I heard recently. In a divorce, a woman's standard of living after a divorce drops about 45% on average, while the man's goes up like 14%. So it's all rigged kind of against us. And one other really important statistic, Martin, is that of the elderly living in poverty, this is the US, but this is also very similar trends in a lot of countries. Of the elderly living in poverty, 75%, 3/4 are women. Yet 80% of those women living in poverty were not poor when their husbands were alive. So he passes away. She has no clue about money. Mr. or Mrs. Financial Helper come in, and the next thing you know, she's broke. So again, the reason I'm so passionate about speaking to women and about educating them and encouraging them to understand this is so I don't want them to be a statistic. And there's no reason why we have to. The statistics are saying more and more of us women, as we get older, due to divorce, death of a spouse, or bad money management, we're finding ourselves in horrific financial situations. And we don't have to. It's not rocket science. It really isn't. Anybody can do this.
Right. And you make the point, I think, very importantly, that there is not an innate problem with women and finance, right? There is perhaps gender determination because of the way that education works and because of assumptions. But if you strip back those assumptions, women are perfectly capable of managing finance and making financial decisions and investment decisions. In fact, in many ways, they're probably better at it because maybe they're a little more cautious.
They might be, yes, because one of the things, Martin, that we found is that one of the things that holds women back from learning about and jumping into the world of finance is self-confidence. They don't have the confidence because they don't think they're smart enough. But the statistics are now proving, for example, all men investment clubs and all women investment clubs, the all women investment clubs are outperforming. And exactly what you're saying, it's because they say their women are risk averse. I think they're more risk aware. and they do their homework and they study. So when they make their decisions, they're making intelligent, sound decisions on what's going to give them the best return. So I think in a lot of ways, women, I'm not saying, this is very general that women are better than men when it comes to money. But I do think that stigma that women are not smart when it comes to money is definitely a lie.
Right. And so, if a woman is thinking about taking a bit more responsibility for her finance or her family's finance, where do they start that journey?
That's a great question, because I always say you want to start very small. There's two things you can invest. You can invest time and you can invest money. And too often what somebody does, they get a hot tip and they don't know anything about the investment and they put their money in, they lose their money and they say, oh, investing is risky. Well, I don't say investing is risky. The investor, an uneducated investor, is very, very risky. So number one, invest the time in your financial education. That's the most important. And start small. And one of the easiest things to do to start with, Martin, is to learn the language of money. Learn the vocabulary of money. I have a real estate dictionary. I have a finance dictionary in my office. And when there's a word I don't understand, I look it up. I find out what it means, because a lot of people are using this jargon, this financial jargon, with no idea what they're talking about. And oftentimes, especially salespeople, say stockbrokers, real estate brokers, they will use this jargon to make themselves sound more intelligent. But when you question them, they really don't know the definitions or what it means. So start by learning the language of money. That will give you a huge head start. And then the second thing I say, and this is exactly what I did, is whenever I was interested in an investment, I put a little money into it. So if it's a stock, maybe buy 1 or 2 shares of stock, because what that does is that piques your interest, that piques your education. It's like, why is that stock up today? Why is it down today? What's it doing? What's causing it? And you all of a sudden become much more sophisticated in that specific investment. I often say, go out and buy a 1 ounce silver coin, which today is going to cost, I'm not sure, about $25 US today, something like that. But just by doing that, and I invest in silver and gold, by doing that, again, you'll start watching the trends of why silver is up, why is it down, how is that related to gold and other precious metals. So putting a little money down, it can be $10. You become so much more interested in the investment.
Right. And I guess part of that is today, of course, there's a lot more information about. People can get a lot of data, and trying to sift through all of that's quite interesting. But I guess you also need a bit of an investment plan as well.
Yes. Well, our plan always has been very simple. It was based on the very first Rich Dad product that we came out with, which was called the Cash Flow board game, and teaches money and investing. Our formula was very simple, and our plan was very simple. From the very start, we were going to take 10 years, and we were going to buy 2 investment properties per year. So at the end of 10 years, we'd have 20 properties, all giving us cash flow. And the goal was to have your cash flow from your investments greater than your living expenses, your monthly living expenses. So what happened is, bought the first 2 properties. Then I started understanding this game, and it was real estate for me. I love real estate. I understand it. So I bought the first 2, and then I understood the game of money, and then we were able to accelerate it. So instead of getting those 20 properties in 10 years, we had those 20 properties in 18 months. So it's amazing how you can accelerate the process just by getting in the game. You've got to get in the game. You got to put your toe in the water. You got to put a little money down. And that's where the real learning happens, because you're going to make a lot of mistakes. People are so scared of making mistakes. That's how we learn. If you don't do anything, you don't make mistakes, you don't grow, you don't learn. So just know, in the world of investing, you're going to win and you're going to lose. And that's just part of the game.
And talk to me a little bit about the difference between investing and trading.
Yes. Well, trading, there's a lot of traders out there. So there's 2 things you can invest for. You can invest for capital gains, and you can invest for cash flow. I'm the queen of cash flow. I love cash flow. But capital gains is trading. So you buy a stock. Let's say you buy it at $50, it goes to $100, you sell it, your profit that you make is called capital gains. With cash flow, you might buy a stock that pays a dividend. And that dividend you get every quarter, and that dividend is cash flow. Same with property. You can buy a property, fix it up a little bit, flip it. That's capital gains, that's trading. Or you can buy the property, rent it out over time, and month, and that cash flow is that profit from the cash from your rent is the cash flow. So we're always about cash flow, because if you're trading, you have to keep trading. Whenever we find a property that we like, it's hard to find a good property. So when we find a property we like, we want to keep it. We don't want to sell it. So we're all about cash flow versus capital gains.
And I think that's important, right? Because I do think many people get confused between the two, right? And they see all of these people trading on Bitcoin or trading on stocks and what have you, even day trading, and somehow think that's investing. But it's a very different mindset, isn't it?
It's very different, because if you're investing for, as I said, capital gains or trading, you have to keep finding the next deal. You have to keep at it. You basically have a job. But with cash flow, the goal is very simple. You have cash flow coming in every month that you don't have to work for, that is greater than your living expenses. At that point, you're financially free. And so for Robert and myself, when we were financially free, one of the greatest gifts, and I'll never forget the day it happened, I realized we're financially free. And it was the first time I actually had the luxury to ask myself, what is it I really want to do with my life? What is it I want to contribute? What do we really want to do with our lives at this point? Because up until that point, we were busy paying the bills every month and struggling to pay the bills every month. So financial freedom just from cash flow. And I know a gentleman, he's 64 years old. He bought 2 properties. He bought a duplex and a fourplex, 2 units and 4 units. He had $4,000 a month in cash flow, and he was financially free because his living expenses were only $3,000. So it's not difficult. It's not rocket science. It does take time. It takes education. You do have to put in the effort, but the rewards are so great.
And what's your perspective on the current environment? Stock markets are booming around the world, and in the US, the COVID is raging in the US and in Europe, but in other places a little bit more under control. We've got huge amounts of uncertainty out there at the moment. Does that temper your views?
It definitely changes my point of view, because I want to look at where, and matter of fact, we just did a podcast with Jim Rickards, and Jim Rickards is very well known. He's coming out with a new book called The Great Depression. And we asked him about the stock market, because I'm not an expert in the stock market. I'm pretty much out of the stock market. But he said it's at such an all-time high that it definitely, if his advice was to take some of your money out of the stock market, you don't have to take it all out, but it's going to turn. It's going to turn. The real estate market is very, very different right now, because commercial markets all over the world, retail, shopping centers, they're all hurting. Office is hurting like crazy because everybody's working from home. But there's also then an opportunity there. What could you do with this space? How can you convert it? How can you change the use of it and have it work for you? Because there's going to be a lot of opportunity. We are sitting on cash, because there's going to be a lot of opportunity to buy cheaply when things do when all the dust settles. There's a huge trend here. I wonder if it is in Australia. I'm guessing it might be, that people are fleeing the cities. They're fleeing New York, Chicago, Boston, Seattle, Portland, and they're moving to the smaller towns, more rural areas, because they don't want to be living in the city due to the whole COVID thing and what's been happening there. So that's another trend. That's another opportunity. So I look at that point of view, because there is opportunity, and if you know what to look for, then you can take advantage of it, which is why it's so important now to be preparing for the financial turn that's coming, so that you can take advantage of it and you don't find yourself behind the 8 ball. You're actually ahead of it.
Right. And that's really important, isn't it? Because, there's sometimes a question of, I've got to act, the fear of missing out, all of those things. Yeah. But sometimes the smart money sits on the sidelines and just waits, and just, you know that things are going to change, and you wait and have patience. That is also part of the skill of investing.
Yes, and that's what a lot of people are doing right now. They're standing aside, they're waiting to see what happens. But there is one thing that people are doing, that are people that we know who are in a good financial situation. They are buying today, they are buying silver, and they are buying gold. because we don't know what's going to happen with our currencies. We don't know if it's going to go to deflation or if it's going to go to inflation, but gold and silver are commodities of years and years and years of history. So I would recommend people invest a little bit in silver and gold just for security's sake against wherever this currency is going.
Well, I had Peter Schiff on my show a couple of weeks ago, and of course he's a gold advocate. I also had Harry Dent on, who's on the other side of the equation. So, it's a really
interesting. He's got a whole other point of view on gold.
Yeah, exactly, and that's part of the reason for doing it, is to give people different perspectives. But
it's a great point, Martin, because Harry was saying it's going to go to 1,000, where I've got other people saying it's going to go to 50,000. So
exactly.
Somewhere in between is the truth.
Yes. The question is where? Who knows?
Where? I don't know. I don't have that crystal ball.
Look, I want to now move on a little bit and say, going back to women and finance, right? What would you say to young women? What's the one piece of advice that you would give them?
I'll give you a piece of advice my mom gave me when I was 9 years old. And she said, Kim, if you don't want to spend your life in a kitchen, don't learn how to cook. And then she said, and Kim, and this is before computers, if you don't want to be a secretary, don't learn how to type. And really what she was saying is, don't put yourself in a box. Don't abide by all the stereotypes or listen to what people say you can and cannot do because you're a woman. That was probably the best advice she ever gave me. And so for women, young women, especially today, I would say really think for yourself. Really start questioning everything, especially in this environment. Start questioning everything and look at where your expertise is, because there's so many areas of finance, there's so many places you can invest, but you've got to find the investment vehicle that suits you. Real estate suited me great. Paper assets, stock bonds, they did not, but other women are great at that. So you've got to find the natural fit for what investment kind of speaks to you. But again, get some education, start small, but just know it is not rocket science. You don't need a college education. You can get out there and you can get started today. Anybody can do this. And I think maybe that's my biggest message, is that anybody can do this. And on top of it, when I started, I didn't have money. Okay, everybody says, well, when I get money, then I'll start investing. No, I didn't have money probably for my first 12 real estate deals I did, but it forced me to get very, very, very creative in figuring it out. So it was a benefit actually not to have the money, because I had to figure out how to get the money. So don't use all these excuses. I don't have time. I don't have money. I've got kids. Don't use all those excuses, because those are just excuses.
Yeah, great advice there. Now, here's the other thorny side of the equation, right? Insofar that some women will be in relationships, often with men. Some men actually think they should own the financial, drive within the household. So, what's your advice to men?
That's the $1 million question, Martin. Because I know people that say, "Oh, we never discuss money." Oh, yes, we do. When there's a problem, we discuss money. I would say this. For women, if this is something you want to take on, and I highly recommend, I think everybody today truly needs to be an investor of some sort. Start getting educated, but more importantly, start having, we designed the cash flow game, and I'm not saying that to promote my product, but we designed the cash flow game to spur conversation and discussion and to start talking about it. So sometimes I do know men sometimes get very, what's the word? It's like walking on eggshells, because as you said, they're supposed to be handling the finances, and all of a sudden she says, well, I'm interested in learning. He could be threatened by that as to, what, you don't think I'm doing a good job. So the conversation has to start, and that's why we, maybe read a book together, read an article together, and just have a discussion, because I would think, as a couple, I talk about rich women and women being independent women, but ideally, if you're in a relationship, this is something you want to do together. This is something you want to learn together. You want to grow together. You want to invest together. And I would think for the guy, what a relief that would be if I have a partner now that I can bounce off of and work together for common good, for common goals and common financial goals. So it's sometimes it can be a tricky conversation, But if you don't start, it's never going to happen. So you got to start.
And interestingly, because what you're talking about there is a set of behaviors, a set of cultural norms, right? And
Cultural,
some of the
yes.
assumed cultural norms versus perhaps ones that could work better. And the idea of partnering and sharing ideas and, discussing stuff, I mean, that is actually a critical capability, isn't it?
Yes, yes. And, just going online and finding an article and just sitting down and discussing, what do you think? Where are we? What do we have? And where are we going? And what are our goals? And I know a lot of couples that do financial goals at the end of the year. Well, now they're doing them every quarter because things are changing so quickly, but doing it together. And on top of it, including the kids, because nobody's going to teach your kids about money except the parents. So I know a lot of women and men who maybe they'll do real estate and they will bring their kids along to look at property with them, or they'll talk about the stock market. I had a mentor when I was just starting out in the stock market. His name was Frank, and Frank would take me aside and we would just have these conversations about the stock market. But this is something, yes, you can do together as a family and educate your kids as you're educating yourselves.
And I guess the other observation that I have, because I speak with people sometimes about, their thoughts with regards to finance, and quite often I find that women say to me, I didn't know enough. I don't know enough. And suddenly, the relationship changes, there's a divorce or, a death in the family or whatever. And suddenly they're confronted with this vacuum, right? The lack of knowledge simply because they didn't do the work earlier in their life. So I think it's really important to think ahead as well.
Yes, absolutely. And there's never too late to start, And sometimes I hear women say, oh, my eyes glaze over when I look at numbers, or I'm just not good at numbers. Well, again, those are just lies. If you want it, nobody is going to take care of your money better than you. And to blindly turn it over to somebody else because you think they know more than you do is, I think, one of the biggest mistakes people can make today. They don't want to take the time. We work so hard for our money. We all work so hard to make money. Why would we blindly turn it over to somebody else and hope and pray that they can do a better job than we can? So I would say the number one thing you want to do is you want to take control of your own finances, men and women. You want to take control of your own finances and not turn it over to somebody else. That's probably the most responsible thing you could do today.
And I'll just add to that, and you mentioned the jargon earlier on. There's a load of jargon out there, but actually It's relatively simple, right? This is not rocket science.
Simple. It's not rocket science. It's very simple. Anybody can do it. Just start with a financial dictionary and start looking up words, or go to a financial newspaper and you'll see a word, just look it up. It's not rocket science. I knew nothing. I knew nothing about money. I knew nothing about investing. I knew nothing about real estate. So if I can do it, anybody can do it. I had no education whatsoever. I bumbled and stumbled all over the place. I made a lot of mistakes. I lost money. I made money. But yeah, it's not rocket science. Anybody can do it. The concepts are very simple. It does take time and it does take education.
I really appreciate your time today. And just to be clear, there's a seminar on the 15th of December here in Australia that you're running, virtual seminar, which is really going to be talking about this in a bit more detail.
We are going to talk about it more in detail, and it's richwomanlive.com. Go there, you can register. I register for it's a live stream. It's going to be a lot of fun. Yeah, we're just going to go into more depth of what people can do, especially what women can do today, given these times with the pandemic or the plandemic, whatever you want to call it. But given these times, where are the opportunities? What do you need to know and be prepared for so that you find yourself in a good financial situation, not a bad one?
Terrific. Well, thank you very much for that. Thanks for your time today, and keep safe.
Thank you, Martin. You too. Such a pleasure.
Thank you. Bye-bye.
Bye-bye.